Welcome to Subramani. I'm going to talk to you like the Prime Minister addresses the country, state of the nation talk. So I'm going to talk to you about state of the market, because many people have been asking me this question privately and publicly. What do you think the market is going to do? So let me start off with a very pessimistic note. The number of investors in mutual funds and the number of people who buy and sell shares has gone up dramatically around COVID, and post-COVID, last say 2.5 years. I think the number of people who have a demat account and who are regularly trading, I'm not in a hurry to call them investors, is gone up to 7-8 crores or maybe even 9 crores. Now that's not a small number, considering that you may have started at 2 crores or something like that. For mutual funds, it has doubled from maybe 1 crore to 2 crores or 2 crores to 3 crores, whatever. Many of these numbers are very difficult to digest, because I'm not sure whether we are avoiding the double counting. If I am an equity investor and a mutual fund investor, are you tracking only my PAN number, or are you just tracking my account? I don't know, so I'm not getting into that. But one thing I'm certain, and for which there is some raw data also now available, that most of the people who come into the markets and who do F&O, well, approximately 99.5% of them lose money. Okay, so let us not be so cruel, and let's say 95% of the people lose money. So if a person loses money, the question is how long will he or she continue to be in the market, right? So there are two, three sets of people. One, young people do not knowing what to do. They're 24, 25, and they can't find great jobs which were promised to them by their parents, by society, by everybody who said, oh, 8% growth, every guy will get a job, kind of a thing. It's not happening. There's hard work to be done. Go meet people, fill up forms and do sales, which many of them don't want to do. So they come into the equity market, which is F&O, or even trading without doing F&O. Then there's another set of 45, 50-year-olds, 55-year-olds who have lost their jobs, who don't know anything to do, and who think that there is easy money to be made, so they come into the market. Many of these bodies will be shed by the market. The market is a cruel place. It's a very expensive teacher. So they will all fall by the wayside. So we may end up with having lesser number of traders stroke investors, but just hold on. Our population is huge. So we may get new set of people. So we may go from 9 crores to 18 crores. And that 18 crores would be fresh, and this 9 crores will drop out. Or maybe 5-6 crores will drop out, but somebody new will come. There is a Hindi saying which says that खड्डा खोदने वाला चाहिए, गिरने वाले बहुत मिल जाएंगे. You will find a lot of people willing to fall into the pit. So all you need to do is to dig. So brokers are sitting there happily waiting for these people to come in and go out. So this is one worry. Another worry which people tell me is inflation. They're saying, oh, if inflation is high, what will happen? Believe me, if inflation is high, equity returns will be better. The persons who have to worry about high inflation are people who put money in debt instruments, not people who put money in equity instruments. Yes, of course, equity returns will fall simply because people's expectation from equity will go up because they're getting more in debt. So if I can get 12% in debt, why would I risk money in equity and unless I can get 16% return? So to get 16% return or 18% return, I will look for better prices. So yes, the equity markets could technically come down, but that will be very quickly covered because of the number of SIPs which are happening. So I don't think that to me is much of a worry. But yes, F&O is a worry. We don't have enough shares coming into F&O. There are some very smart companies like Avenue Supermart who have kept themselves out of F&O. In fact, there is very solid reason why the government of India or the SEBI should increase the number of companies in F&O. I am not joking. They have to increase the number because that is the way you capture more information about a particular share. And if the SEBI allows the long short funds where companies will be allowed to go short and will go long in the same fund, then those companies will again look for depth. We don't have enough depth in the market. Now these are 2-3 things. Let us keep them aside. Other than that, I think one good thing is the SIP figure will continue. I used to be skeptical. In fact, I have had talks with CEOs and who were very optimistic about SIP figures. I was not so optimistic when the beginning of COVID, which is say March 2020, I was sure that the SIP figure would fall. It didn't fall. In fact, it has gone up. So here I am eating my words. That is one thing. And another thing is, will people remove money from equity? Answer is yes. If they think real estate is going to give them good returns, they will remove money from equity. Now here is another funny thing, that like they say, Nagasaki and Hiroshima were destroyed in a day, but Rome was not built in a day. So similarly, people will assiduously do 5,000, 10,000, 50,000 rupee SIPs, build money over 5 years, 10 years, and then in one shot remove it and put it in real estate. Will this happen? Yes, this will happen. It has always happened. It will continue to happen. People want bigger houses, people will buy. Unfortunately or fortunately, people are not very sure about their job, so they are not committing. That is also true. So somewhere between people wanting to buy a bigger house and somewhere wanting to commit, or saying, okay, husband and wife both have a portfolio, we can sell off our shares and buy real estate, that is bound to happen. And just because you have got also equity returns, please have a look. Last 2-3 years you have got a good return, maybe 4 years you have got a good return, but if you take a 10-year, 12-year period, we've got reasonably good returns. We've not got sensational returns. So equity returns, please see them over long periods of time, see what rate you have got. So if you have got 2-3 years of great returns, it will be followed by a bad return, because there will be reversion to the mean, right? So don't believe that it will continuously go up, it will never go down. Those things are not there. You can't say I've last 15 years I've seen the market recovery is always fast. Not true. Sometimes it may be fast, sometimes it may not be fast, right? Could you make 10-11% over the next 5 years? I think reasonably yes. We are at a market which is reasonably fully priced. I wouldn't say fully priced, but reasonably fully priced. So there is scope for money making, but you will make money only over 5-6 years. Over 2-3 years, yes, you could even lose money, because the last year's gain may be difficult for the market to digest, so the market could go down. So if you do not have a 7-year, 8-year kind of a view, do not come into the market. This is not meant for you. It's going to be a very difficult market. Having said this, I said that last year also, so I have been wrong, but I would still stick to that, because predicting markets over 1 year, 2 years is it's very difficult. Of course, predicting over 5 years is also difficult, but I would rather stick my neck out with a 5-year, 6-year, 8-year prediction rather than a 1 year, 2 year prediction. So getting double-digit growth, and double-digit I mean just 10 to 12% over 5-6 years looks more possible, but may not happen over 1 year. So if it's a 1 year fund, don't even come anywhere near. If it is anything less than 5 years, stick to debt, or maybe if it's 5 years, stick to 80% debt and 20% in equity, but definitely not more than 20%, 22% in equity, not more than that. Every company has reduced its leverage, banks have reduced their leverage, and NPAs have disappeared, which means every company today, whether it is in the infrastructure or steel or any space, sugar, they all are deleverage their balance sheets. So they are at less than 1% or less than 1 times borrowing. If they are at 0.7 borrowing, and banks have got rid of their NPAs, look at the results of HDFC and ICICI. Very good result, robust results, big dividend by HDFC Bank. This is a great time for the banking sector also. So the banking, mutual fund, insurance sector is also poised for growth, willing to lend money. And if now investors and entrepreneurs want money, there's a good chance that the bank will give it, and the bank may monitor it, but the bank's NPA has gone down, which gives the bank more confidence to do big projects. So that is one great thing. You're seeing an upswing in the travel, right? So people are traveling. So if you go to if you see an Indigo flight, it is packed. If you see any of the flights, they are packed. The airports are crowded, the lounges are crowded, the waiting time for a taxi is high. So you see all that. The margins may have gone down for some of these, but when you go to any resort, and those resorts are full, you go to hotels are not so full as the timeshares, right? right? The Thomas Cook or the Mahindra Holiday Resorts. So Thomas Cook would have 100% occupancy, Mahindra Holiday Resorts would have 95% occupancy, and the hotels would be languishing at 15% occupancy. So yes, the boom is happening. Taxi services are booming. There is always the fear of COVID coming back, so people are traveling with a vengeance. So all that is, but we will have to be prepared for the post-COVID world. The positives, more positives for the economy is the PLI, right? So the incentive schemes are going to work, are working, and you are seeing a lot of money. You're seeing India exporting 5 billion worth of handsets and telecom. So we are not buying telecom from any other place. Of course, brands are foreign, but we now have telecom factories making handsets, right? So that is happening. The China Plus One is working. Lower income tax is working. A lot of people are coming here and manufacturing. Infra still needs a lot more investment. The government, state government and central government, especially this double engine ka sarkar, where the government is state government and central government are working well in tandem. UP, Madhya Pradesh, Gujarat, these are places where there will definitely be growth. So if there is growth happening in North India, South India may not be very far behind, right? So where do I see, I love to see the 100 airports running. I love to see 100 colleges, medical colleges running in various parts of the country. So these are definitely going to have a great impact on the economy. Too early to say when, but the airports will already have an impact over the next 2-3 years, because all these airports will get operational. So more aircraft, bigger aircraft, smaller aircraft, that means we may start even manufacturing passenger aircrafts in India, right? If you can make jet fighters, and well, we may not be very far away from making our own small Indian aircraft, right? So that could also happen. So where am I bullish? I'm bullish definitely on pharma, but my pharma funds are already doing well, so I'm a little worried. But yes, pharma looks good, infrastructure looks good. We need to invest. Private sector investments in infra will happen. The power sector looks good, but maybe the run-up has already happened. I'm not giving it as a tip. I'm not saying buy Tata Power at 300. No, I'm happy I bought it at 30. But I'm saying the growth is still visible in these sectors. BFSI, which I said earlier also, is definitely on the way to do something big. Banks are stronger. Banks will lend money. SBI is very strong. They've written off a lot of their NPAs. So among the PSU and banks, I would stick to SBI. The others I don't know. I'm not saying they're good or bad, but I really don't know. Do we even understand what will be the impact of 100 airports? What about the locations around that? What about factories coming up there and all those things? That's going to be big. Our manufacturing is booming. Our service sector is not doing too badly. I'm pretty optimistic about where this economy is headed. But I also want to be careful that because the markets have done well over the last few years, the rise won't be like this. It could be like this. So it could be wavy, it could go up, it could go down. It could be a K-shaped economy. Some companies going up like this, some companies going down like this. You have to find which sectors you are in and where are you going to make money. Thank you.